Stock of the day, though, Lendlease Group, certainly in focus as it confirms a massive shakeup of its strategy, recycling $4.5 billion in existing capital by exiting its overseas construction business and divesting from offshore projects and refocusing on the Australian business. Lendlease has been under pressure from major shareholders to radically change its strategy after you would say decades of disappointment. The company says significant progress is expected within 12 to 18 months. Chief Executive and MD Tony Lombardo confirms that tough decisions were made and the new strategy is intended to be less complex, more focused and fit for purpose. Alan Gray is one of the major shareholders of Lendlease and will be speaking with the MD and CIO Simon McWhinney this afternoon. And gents, big decision by Lendlease. I must admit, has been, even though the share price has jumped sort of 9-10% this morning, UBS has come out and sounded caution on the strategy, noting that it's addressing key investor returns, but questions whether it will manage to get enough scale in Australia. Citi has also stayed with its neutral rating and saying its update is positive in line with broader expectation. However, Citi says we continue to remain of the view that executing this strategy may take some time. So, David Lane, a lukewarm reception to Lendlease.
Yes, well, as you said, Koshy, Lendlease has been a very disappointing stock for more than a decade, really, and investors should be somewhat happy about today's result or today's announcement. But execution is the key, and execution has been fairly poor from Lendlease for a long period of time. We've seen many years ago when they went on their overseas adventure that was going to be the future of the profitability for the business. Now they've taken a turn and said that they're exiting the overseas business and doing a very large on-market share buyback. So about $3.42 per share will go back to shareholders over a period of time. Although importantly, that's an on-market buyback. We're no longer allowed to do the off-market ones that benefited a lot of retail investors. It's a positive in the short term, but Lendlease investors unfortunately have been looking for some positive news for a long period of time. Having said all that, we've actually got a buy recommendation on the stock. We do think it's undervalued, and we do think that this announcement gives the ability to unlock some of that value in the assets that they've got. Their gearing will be down, forecast to be around 5 to 10%, so lower gearing. But yes, all the focus will be on the Australian residential and construction business. So very focused on Australia now. We'll see what happens as to how they execute that.
Okay, Scott, what do you think?
Yeah, look, disappointing is the right word. You both used it. Just pulled up some numbers. This was a $22.80 a share company back in 1999. 25 years later, they've lost 71.8% of that value. Look, I think from a corporate strategy perspective, this was forced on them by shareholders, let's be clear. So when the management comes out and talks in very glowing terms about the new strategy, what they're really saying is we had to do it, and we're going to try and make the best of it. If they thought it was the right thing to do, they would have done it months, years ago, and actually changed what's going on. So I've got to say I'm still really, concerned is probably the wrong word. I don't expect bad things, but it's really, really difficult to expect good things from the company. You mentioned some of the other reports earlier. I think that's the story, right, is show me the money. After a certain amount of time, you're entitled to look at a business and say, guys, you haven't really done much to create any value recently. What makes you think, or what makes me think, you're going to change your stripe all of a sudden, despite their best efforts. This is a really difficult industry to be in, by the way. And sometimes, what's the old Warren Buffett line about a management with a reputation for brilliance, meaning an industry with a reputation for bad economics? It tends to be the industry's reputation that remains intact. This is one of those stories I think you're going to want to see, for mine anyway, a whole lot more value. Look, great. If you're a long-suffering Lendlease shareholder, you made 10% this morning. That's a pretty good deal. So take the money and run and be thankful. I think it's really ambitious to expect necessarily all of a sudden they get better results because of something that was forced on them from the outside. So maybe this is a buying opportunity in hindsight. Very, very hard to know. It's really even hard to hold this one for me, I've got to say. Again, just on the basis of the history of the last 25 years, it's just an ugly story as a business, ugly story as a share price. I don't know, I'd rush out to sell, but if I owned the shares, I probably would sell them and go and put the money somewhere else.
Right. Okay. David, what was are you a hold to see what they're doing?
We've actually got a buy recommendation on it. So we had a buy, we had a buy prior to the announcement. And at this point in time, I think, that's our view.
Right. Okay. Because as Scott was saying, it is a tough industry to be in. The projects are big and massive, and if you get it right, the payoff is there. Get it wrong, and Lendlease has a bit of a history of getting some of these big projects wrong, and the margins get squeezed or they bring it in for a loss. That's the issue, isn't it?
Well, that's it, and their engineering business, which they have exited, that was rife with problems. They had a lot of issues with their contracts being badly priced because of the long-term nature of their work. Little bit less as far as the Australian construction that they're going to be focusing on. But yes, you're right. They're difficult margins to get right. Even the biggest and the best tend to get it wrong. So it's a high risk business. So probably that's the other thing to point out. We do have a buy, but you are taking on risk in being in Lendlease.
Okay. All right. Okay. Let's